Richard, last night we had results from Deutsche Bank, and to Lex's great surprise, or perhaps not such great surprise, the results were quite good. Tell us about them.
They were good. Deutsche Bank's revenue was up by just about a quarter to 10.4 billion euros. And that's hardly unexpected because we've seen great results on the trading side, particularly from the US banks and from Credit Suisse. And Deutsche did an extra spurt in credit in its investment bank. So it had a particularly good quarter. So things are looking sweet, except for a monumental fine that it had to pay. And so the bottom line, net income, is a much more pedestrian 560 million. Usual stuff, fines, litigation.
It is strange, though, given those happy trading results, that we had a strategy update today, and what it seems to say, to a naive reader such as myself, is we're pulling in our horns a little bit in the trading department. It seems like they're quitting the party just when it's getting good.
It does feel a little bit like that. One wonders whether Deutsche has been, if you like, making hay for as long as it can while the sun shines, money's cheap, and there's no real pressure to fix its leverage ratio. But it suddenly seems to have realized that it must get more in line with its global peers. And with a leverage ratio, so that's top quality equity to total assets of 3.4, I think it is, %, then they've got some work to do to reach the more normal for a bank of their size, 5%.
Well, I suppose all of this can be summed up in all the work they have to do can be summed up in their return on equity target. They tell us they're going to get a very respectable 10% in 2020. What do you think, Richard?
I'd love to have some of what they're smoking in Frankfurt right now, but they're right on 3.9 at the moment, thanks to all that noise. So they're going to more than double. And this is where I have a problem, because I think the revenue line may or may not continue in the same vein. We just have to assume revenue will not be where the motoring happens. They've got a cost-income ratio of 84%, an efficiency ratio, and they're targeting only 65% by 2020 in their strategy. That still seems incredibly high to me. So I think they're going to struggle to get to their 10%.
Well, Richard, we have 5 years before you're going to turn out to be right or wrong. I still look forward to it. Thanks very much.